Hey there, and welcome back to Wing Trades. I'm Aaron, your host. And before we begin, if you're listening to this as a podcast on Spotify, Apple Podcasts, SoundCloud, or wherever else you may be getting your podcasts, you can get a vidcast version of this episode by going to youtube.com/wingtrades. For today, we have a cool little announcement for you. This is a freebie from wingtrades.com. So if you go to wingtrades.com/Chrome, you have the free Google Chrome theme from Wingtrades that's got this really nice olive drab green color and the green graph background. So just as us traders really like to customize our trading setup, whether that be laptops, desktops, monitors, whatever, as well as charts and all those goodies, this now allows you to customize your Google Chrome so you've got yet another custom thing in your trading toolbox. So that is available again at wingtrades.com/Chrome. Click on the big gray button there, and it looks like we currently have 103 active users with that Chrome theme, so that's pretty awesome. If you're listening to this recording way in the future, I'm going to be surprised and pleasantly surprised, a little bit happy to see what that number is, because hey, we made the Chrome theme. I love to use it. You can see I'm using it now, and it's free, so why not? So let's review that play from last week. I know it was a very brief introduction to kind of how all this option spread things work. And here we have the EEM. This is the Emerging Markets ETF. We had a call debit spread. So this is a bullish position. We want volatility, right? That Vega Greek, we want that to increase. That's our edge on the play. And when we entered this position and spoke about it about a week ago Tuesday, so when this was recorded a week ago, we had a probability of profit of 72%. That's still the same, but the premium that we purchased it for was 76 cents. So right now this contract is worth 79 cents. So in 1 week, we have an increase of $3 per contract of premium. Now that's pretty good, right? We're sitting here, we enter a position, it's got about 37 days left, and it goes up, right? Emerging Markets ETF, EEM, that's a tongue twister there. EEM has not increased or decreased very drastically over that time, so we're sitting here bringing in a little bit of that premium due to time decay. So that's the review of last week's play. If you want to go listen to it, you can learn and understand a little bit of why we entered that position. But let's move on to the next little step here, and I want to talk about risk. So if you'd like to go ahead and walk through this with me, if you're in front of a computer or watching it on the YouTube vidcast, you can go to wingtrades.com/option-guide. Again, that's option-guide, and you can walk through this with us. But I want to talk about risk because a lot of people have this idea that, oh, risk is bad, risk is evil, and we're taught about this in high school, right? You don't want to take any massive risks because it could all blow up in your face. But what you're not taught in school is how to properly use risk, right? I'm sure you've heard the saying, no risk, no reward, and then somebody does something stupid and says, hey, hold my beer, and then they get themselves knocked out. But this is focused on defining that risk, right? You want risk because you want reward, so you have to know how to use risk to your advantage. So, of course, every trade in the market has inherent risk, right? There'd be no reason to take a trade in the market if there was no risk to it, because that means, well, your money's just sitting there and it doesn't do anything. It's not going to go up. It's not going to go down. That's risk-free, and we don't like that as traders. There's no such thing as risk-free money. So I'm sure you've seen a lot of silly Facebook ads, right? Oh my God, look at us. We're making so much money trading momentum and it's risk-free. Well, the unfortunate truth about those types of ads and that type of trading is if you're trading with a massive room that is all buying the same thing, I'm not going to name names, of course, but there's so many shares that are being bought back and forth at the same time that the people who own those rooms, in most cases, already have the shares that they are telling you are a great buy, and you go in, enter it, it pushes the share price up a little bit, and then they exit. And that's the risk-free money that they're talking about. Oh, if we buy it, it goes up every time. I wonder why. So we as option traders realize that there's no thing as risk-free money. We're not trying to trade momentum. We're trying to get in, manage the risk, manage the opportunity there, and let the play do what it needs to do. So in order to profit in the market, we have to carefully manage that risk. Failure to do so, whether that's buying single leg call options, right, just buying a call, buying a put, or shorting a call, shorting a put, right, those are naked options. Failure to do so and the odds of losing much or all of our capital in our account is very high, and that's because we're not managing that risk. We don't realize that, oh, okay, we're going for 100% gain because that's really flashy and really cool, but we're not looking at the, maybe I can take 100% loss on the money that I'm putting up in this trade. So option spreads is where we move away and we take one step further from just buying a call, buying a put. Option spreads are risk-defined options or risk-defined positions, right? We're entering a call on the long side and we're also entering a call on the short side, and that's a call debit spread like we did on EEM last week. That gives us a max profit and a max loss and a probability of profit based on standard deviations. Pretty simple. If we can manage our emotions and not go outside of the risk-defined play and go, oh, that looks cool, I'm going to buy a call on it really quick, and then my whole account, all that data is now skewed, we can do very well. So no spread, this is a little rule, no spread should exceed more than 10% of our total portfolio value. And why is that? If we have a position, let's say we're in an account that has $1,000 worth of capital. If we risk $100 of that account, right, the most that we can lose is $100, and that's 10%. Now, while, yeah, that's a pretty large loss in an account, that could be a lot worse if we're going, wow, this position looks fantastic, and we enter 20, 30, 40, 50% of our account. If that goes against us, whether that's because of some crazy news that happens, or maybe we're just flat out wrong about the position, it definitely happens. If you're following somebody, following their trades, learning from them, whatever, and they've never posted a loss, consider, why are you following them? Because it's going to happen where you enter a position and you're just wrong, right? And that is why we enter at the maximum amount of our portfolio, 10%. So some of these trades, of course, they're going to be losers all the way to expiration. If that happens, we've set that risk, right? We understand that, okay, let's say it's 10%. We know that the max we can lose is 10%. And if we freak out because that position is too large, let's say 20%, 30%, we're going to have the probability of selling it early just because our emotions get the best of us. We're not following the trade plan. We got in too large. We're just freaking out. Nothing makes any sense. We're wondering why the stock is going against us. And all of those ingredients mix into this panic sell, right? We don't want to do that. We want to be able to enter the position, and if we need to, forget about it. Let the position do what it needs to do. So that is risk in a nutshell. We'll go into why I spoke about holding it all the way to expiration. We'll do that in the next podcast as we focus on the stop loss fallacy. We'll explain what that is. But I want to thank you for spending your last 9 minutes with me. And if you haven't reviewed the previous episode and you're here kind of wondering what's going on, please go back and listen to that. And if you haven't joined us on the Wing Trades trading floor, you can go to wingtrades.com/sign up or just go to the wingtrades.com homepage and you can see what we are all about. So have a great rest of your day, and we will see you next week.